This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
That's what brings the viewers back. That a boy.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
Good morning, everybody. It's Thursday, August 28th, and this is the AgYield War Room. Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Quickly here, overnight markets had September corn down 3/4 at 381 3/4. September soybeans were up a half at 1027 3/4. And September Chicago wheat was down 3 1/4 at 499. We had weekly export sales out this morning, solid for corn. Net cancellations on the old crop of 17,800, but new crop above 2 million again, 2,089,700, which was at the upper end of the range. Soybeans, old crop net cancellations 189,200. New crop sales 1,372,600, which was well above the upper end of the range there. So good solid week on the soybean side. Wheat fell in line with estimates, 579,800. Meal was also in line, 47,300 on the old crop, 214,800 for new crop. And on the oil side, real good old crop oil sales at 11,400, and new crop was also above the upper end of the range at 7,100. We will have first notice day tomorrow, so those September positions will need to be adjusted for here today. Also, United States and Chinese delegations meeting in Washington, supposedly today or tomorrow. So I know we'll be keeping an eye on headlines out of Washington to see what they come up with there. And yeah, solid corn and bean sales there. So I guess Dustin, maybe kick us off with a few thoughts this morning, and then we'll throw around the room.
Yeah. So, a key day here. First notice day tomorrow. We did see, SEPTI spreads start to break again yesterday. We'll see how we end up today. I think that you're going into harvest with in my view, a good chance that there's just too many acres, and that just is a weight on the market. And we're just going to test what the market's capable of doing. The 1-3 carry in is the one thing I think that's fairly supportive, is that we didn't have a burdensome supply coming into this, or so we think. And then we do have the chance to be surprised by all this disease pressure. I've heard a lot of southern rust stories, and it's you just don't know till you get out there. But it's going to be hard to overcome, in my opinion, the 97.2 million acres. If the debate is if it's a 187 or a 182.7, like Pro Farmer is suggesting, those are still record yields at basically record acres. So we just can't lose sight of that. Now, could it be sub 180? I mean, it always could be. We've had bigger surprises in the past, but I would suggest, just with the weather we've had, that anything in the 180s is still going to be a little bit of an albatross in the market, an uphill battle. And until we kind of get through that gut slot time frame, I think we need to kind of prove lower prices to make sure that we're reaching these ultra lofty demand numbers the USDA has written down.
Very good. Justin, more and more news stories, and the Deputy Ag Secretary was speaking at Farm Progress just about the potential for maybe some payments down the line here to get us into October. I guess, what would your overall thoughts be on how that could potentially affect the market here from a grower's perspective?
I mean, we get a lot of payments, so I think that's a Band-Aid on, trying to fix an overall problem that we have, which we've talked about a lot. It's costs are super high, above cost of production. South America continues to expand. Luckily, we have a really good, demand background right now for corn. Obviously fixing the bean I think fixing the bean relations with China or figuring out, something there would be super helpful. Getting some of those unknowns with renewable diesel, with small refinery exemptions. I think getting some of that out of the way could be super positive. I don't know what kind of payments they're gonna, throw at farmers. Obviously, it'd be welcome for a lot of people, but it's a Band-Aid. I think the farm bill was, very positive. I think increasing subsidies on crop insurance is very positive. So I think there's plenty of supports there. Now it's, a matter of how do you get prices lower? I don't think you can just keep writing government checks, to offset super high prices. I don't think that's a long-term fix by any means. I don't think anybody does. So as far as what that does in the short run, maybe it helps with some, certainly would help a little bit with some cash flow and some of those kinds of things. I think to Dustin's point, we're still going to have to, call it between now and the end of the year, figure out, how to store a record crop. There's super weak basis levels, especially in soybeans as you go north and west in the belt. Again, that's, I think, related to that's where the biggest jump in yields is going to be over normal. That's where the most acre growth was this year for corn. And you don't have a export market out of the PNW for soybeans. So you're seeing, dollar under basis levels. So pretty ugly. So I think it's, like we talked about yesterday, it's dealing with, 16 billion bushels of corn, give or take, and a bunch of beans, like figuring out where to store it, how to capture carry and manage that, I think is the most important thing that's going to happen in the next few months. We already know we have, farm bill support levels. We've got all those kinds of things. Now I think we look at a dollar under basis and how to capture as much of that carry as you can. Maybe some of those payments, to your earlier point, help the producer store more, free up some cash that they don't have to sell as much off the combine. Another thing that Dustin talked about was 1.3 whatever carry out in corn, and that tight, call it that tight number, was traded throughout the entire summer, and I think pretty disappointing finish to that whole story, where you've got Sept East corn now going into first notice day at basically full storage. So I think that it's right to be skeptical on what that number actually was, especially if we're doing a lot of business. We had, we use a lot of corn for ethanol. We export a lot of corn this year, and here we are at, Sept East corn at full storage. Kind of odd.
Yeah, and I would definitely like to add to that too, because if you just think about USDA counted stocks 3 times that should have been picked up, but they also counted acres in a similar type of survey, and they were off by 2.5 million for beans, right? So like the smaller farmer participation rate, I think it was a couple of years ago, I had someone tell us, and a different analyst, like how impressed they were with the USDA surveys. Just look at the survey from June 30th until the August FSA number, which is obviously a much better number because it's real certified acres. So I think that we do have to question, like, there is a possibility of the market action suggests that survey may not have counted stocks right. Even though I don't want to be a USDA naysayer, like we've always been kind of more of a defender, but the market action kind of speaks for itself.
Yeah, and it wouldn't surprise me either if you get the next stocks number and they adjust yield lower, carry in higher, kind of make it all work out, and you're still kind of in the same boat. If we were tight, with the demand, the market would do its job, right? You would see basis levels start to scream. You would see commercials stand for the September contract. That's not happening. Maybe we see something, after first notice day or, something unusual, but regardless of what the USDA writes down, the market will find the right price. It's just supply and demand. It'll work out. So in the short run, you can get reactions to a report or anything like that. But if the carryout was super tight, the markets would be saying so, in my opinion.
Right. In the end, but look what happened in February. We had July D's almost 40 plus over. Right, because it was a time frame where we had a dollar rally in the March 25 contract from basically this date last year until Feb 10th. And so that was an opportunity. We also had this is I think an important point to the Brooke Rawlings comments you made, Dan, is that these payments don't happen in a vacuum. Last year we had the Farm Act payment in the 11th hour, right, of the year. These are all in lower pricing environments. And then we still had a dollar rally from August until Feb for a marketing opportunity. So I think there's definitely reason to be a little bit skeptical on like, obviously when I started off the conversation, I'm kind of bearish because of supply and all these acres. But we also need to be skeptical of like anything can happen, like that dollar rally last year or like the 2021 rally coming out of COVID from, surprising numbers. We just don't know. Those payments are not likely in the late 2021 environments. They're much more likely in the 24 type of environments than what we're seeing today. So there's some natural hedges that are built in there. And we've been talking about MFP3 for a while. This is it. This is what is probably going to happen if prices continue to stay lower, is what it sounds like. And on top of the increased farm reconciliation bill, on top of insurance payments. So like, again, I want to just kind of preach the balance. The need for balance is important, even if the market looks pretty bleak right now and looks like we're going to be flooded with extra supply. There's still a lot of comparative advantages that are coming in behind that.
Ben, what's on your mind this morning?
Yeah, I agree. I think that in the short term, meaning the next, 2 to 6 weeks, I think it's going to be hard to put something together that's sustainable just from the volume that we're going to see in corn. Beans are a trade deal away from being, I think, explosive. So it's probably going to be a really quiet time, would be my guess. Call it 15 cents of $4, 20 cents of $4 for a little bit. Lower definitely looks better on the matrix for most people. So I don't know, just really, had this not been first notice day week, I would look at corn and say, what a complete and utter failure, and how it's performed from the opening, the opening bell on Monday morning till today. The week is yet to be finished, but I think it's back to its 20-day moving average. It needs to hold and bounce here if it's going to do something. And again, I know this sounds like I'm speaking out of both sides of my mouth. As I'm not bearish corn, but I kind of think we're going to make new lows before it's all said and done.
All right. On a more positive note, let's move over to livestock. We got another day of fresh highs in cattle, and Rylan, was interesting. October hogs went back and filled that gap from June. So we'll see how that reacts here today if they kind of settled off that high. But anyway, what are your thoughts here this morning?
Yeah, absolutely. Still another new high in cattle here, but we did see the beef market start to weaken up a little bit. So it just kind of feels like you closed off the highs yesterday. You had choice down $1.33, select down 305. So it does kind of seem like the fundamentals are starting to show a little bit of caution here, especially in the tail end of grilling season. But we really haven't seen any cash trade develop here. So a little bit of asking prices holding at 243 in the south and 245 in the north. So it still seems like cash is going to hold up relatively firm here, but overall I think there's a little bit more increased downside risk with what we're seeing going on in the beef. Export sales were relatively firm in both places for both beef and pork, so I do think that's at least an area of support right now. But yeah, on the hog side of things, open interest has been increasing on this rally. We've seen a lot of technical support here. Cash market has stayed firm, and really, just like we've been talking about, that October is really starting to narrow up where it was relative to where cash is. So it still seems like there's probably more of that to go at this point, but there is a little bit of caution after next week as we kind of get out of the peak seasonal demand here, and carcass already starting to show some signs of weakness. Down $1.40, bellies down almost $5. So I think you just got a little bit of push and pull here, maybe run into a little bit of resistance up here now that we're starting to see some fundamentals start to crack. Very good.
Appreciate the update there, Rye. one thing to note, tomorrow will be Friday, which will bring us to Fun Fact Friday. Be sure to tune in. You never know what you're going to get on Fun Fact Friday there. So looking forward to that. Also, we appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so. It'll certainly keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. Real quick, we just came into the open here, so let's get a quick readout here. September corn down a half at 382. September soybeans are down 3/4 at 1026.5. And September Chicago wheat is down to at $5.25 there. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.